Hi there, Serial Trader here. I'm going to do a video on the major US indices, and finally, it looks like we put in our top. And just looking here at, well, actually, this is a 3-hour chart of SPX. Just shows 3-hour, just visually looked correct to me. So nothing special, just arbitrary choice there. Now, I've removed the sub-labels for this wave 5 that we've been working, because at this point we've had enough of a reversal, and it certainly looks like an impulsive decline underway here. So I'm quite satisfied and confident to consider that yes, we have our top in place for this 5-wave move off of our March 4th lows here. Now, I only have the 5-wave move labeled. I don't have any other higher degree labels because I don't want to distract from the real, trading relevant stuff. I mean, did we just finish the 5-wave move off these March lows that finishes our move off of our October 2020 pre-election lows, that finishes our move off of the March 2020 COVID lows? That's a possibility. And if that's true, if we did finish all of those sequences just now this week here, if that all came to fruition here at 42.57.16, then we have some substantial downside potential, okay? Because we would be operating on such a larger degree time frame, and obviously being that it's that large of a degree, the amount of price movement you can have at such a large time frame, as far as the pattern being relevant to that time frame, is enormous. But here's what I want to do. I just want to consider this. Okay, we have what appears to be a completed 5-wave move off of our March 4th, 2021 lows. So much more recent. So what do we expect after that? Well, we expect at a minimum some sort of correction, proportional correction of this overall 5-wave sequence to the upside. And I'll just throw up some standard fib levels. We got the 382, the 50. Let's put on the 236, the 786. That should be good. Okay, so far we have not even hit the absolute minimum, in my opinion, which would be the 23.6% retracement, which would come into play at 41.30, and then the 382 would get us back to the prior 4th wave of one lower degree, which is a very common target, even if we are going to do something, for instance, like this. And just bear with me here. So if we're just working, what's going to be an ABC down, I think it would be quite a reasonable target here to get down to this prior 4th wave of one lower degree, which comes into play at 4,056.88. And again, the 38.2% retracement would be 4,053.24. And obviously, if we are doing more than just a correction of this degree of trend, if we're doing, a much larger degree of trend, well then we could actually not only do a deeper tracement of this, we could go and take out these prior lows, these March lows here, which are at 37.23.34. But I want to take this one step at a time. I don't think it's going to happen as quickly as some people might want it to, if it is going to happen. So let me just delete some of this and get a little more short term here, because I think that's more applicable to what most of us are trying to do. And oh, by the way, I was able to close some positions finally that I had open for several weeks at this point. Finally, I was able to close them and do some good, so that's nice. So I'll tell you what I'm looking for here short term. Now, this is the 3-hour, right? Now, I think we're either in some sort of A or 1 down, right? Looks like we're nearing the completion of 5 waves down off the top. And this is basically our first lower low for quite a while. So to make a lower low, we got high, higher low, higher high, higher low, higher high, finally a lower low. This was the place to break, basically, to make the lower low was 41.67.93. Well, we've gone as low as 41.64.40. So that's good. We've actually made a lower low. Now, I think the next, from a swing perspective here, the next step would be to come up and make a lower high as opposed to a higher high. So let's get in here on, maybe the 15-minute, let's go 30-minute price chart. Now it looks like we got some sort of 1, 2, 3. It's a little dicey in here how you label the 4, and then probably getting close to 5 waves down and complete here today. I'll show you the futures. After the regular session ended, we did dump quite a bit more actually. So Monday we might have just a little bit more downside to complete this initial decline. But what I want to do is, since there is quite a bit that happened during overnight sessions this week, even though you can certainly get 5 non-overlapping waves either in development or nearing completion here on the actual SPX cash index. Hang on there, I'll go back to the 3-hour. Since we can do that, I want to go to the futures, because the futures I think are just a little bit more clear since they include all the overnight activity, which happened to be relevant this week because there was actually quite a bit of overnight movement, whereas sometimes overnight session is almost irrelevant, but in this case I think it had some relevance. So here I think it's pretty clear on the 4-hour chart here on the ES futures, and this is now rolled over to the September contract from the June contract for anyone that's interested in that. But I think what we're doing here is our initial 5-wave move down, okay? And it looks, I mean, we could obviously dig a little deeper here, but it's getting pretty extended to the downside. You can look here. So this is the 4-hour time frame. If you look at our 4-hour RSI, we're currently sitting at 19.52 on the 4-hour RSI, so quite oversold on that time frame. If you just look back here to our previous, swing down we had into that May 21st low, our 4-hour RSI at one point was 20.36. So we're right down, in fact, below that extremely oversold level. So certainly a natural area to have a bounce start here soon. And also the fact that we have a pretty clear looking 5-wave decline that looks, nearing its maturity. Certainly expecting a bounce here, some sort of ABC up. Is what I'm looking for, right? And probably if we put in our low early next week, maybe Monday or Sunday night, whenever, looking for some sort of bounce up here. And then I think this will be kind of the next opportunity to get a short position on. And you could even attempt a long position here. I may do that myself early next week if it looks nice. Attempt a long position for what I expect to be a partial retracement of this overall decline from our all-time high, okay? And of course, you'd throw up all your fib levels and just kind of watch it from there. And then once it looks mature, maybe we get into a nice fib retracement level. We have a clear three-wave move up. Then we can be putting on some bearish positions and expecting another 5-wave decline. And you'll note I'm not making any assertions or assumptions about how substantial this downside could be. Just simply focusing it from a more simplistic trading perspective. Okay, we have 5 waves down, looking for a swing low shortly, looking for a partial retracement up in some sort of 3-wave move to put a swing high that's a lower high, and then that will be a potential opportunity to, put on some bearish positions for another nice swing down. That's how I'm looking at this. If things actually get, real interesting and we really start tanking, then perhaps we do have one of those larger degree crashes or corrections underway. But I'm not making any assumptions about that here. Just following the shorter term price action while still keeping in mind the longer term context that it may have. Okay, so yeah, basically, I think we have close to what would be an initial 5-way move down for, let's say, either an A or 1, and looking for a bounce probably soon here. Okay, well, that's not all I want to go through. So yes, I think the wave patterns are quite clear here. And just a recap before I switch over to the Thinkorswim charts. If you've been following me for any length of time the last few weeks and even at least a couple months here, you'll know I've been working this pattern, looking for this 5-wave pattern off the March lows to complete. Did have some targets around 4,300. Actually didn't quite get there. Only got to 42.57, so not quite 42.60. But hey, 40 points or so shy of those targets. Whatever. To me, that might just be even a sign of underlying weakness. So you couldn't even make some of those higher confidence targets, and now that we're coming off nicely. Anyway, it doesn't matter. It's not our objective to make perfect targets. It's our objective to try and catch some price action in our favor on a consistent basis. Okay, well, that's all I wanted to go through here. So yeah, I think we got potentially substantial decline kicking off here. Now, think of some candlestick chart. All right, so interestingly enough, on the daily chart here on SPX, we have broken and closed below the 50-day simple moving average. So that has been a fairly impenetrable level for, well, quite a while here. Let's just say it's kind of a big deal that we actually not only went below, but closed below that 50-day simple moving average. And obviously we've closed below that 20-day as well. And looking kind of wanting to roll over here, so that's good. Now, I think I will point out the weekly chart, because for the longest time, there's really been nothing as far as signals on this weekly chart. Well, we got something. So we have a weekly bearish engulfing candlestick engulfing, oh yes, 3 prior weeks real bodies. And let me just double check that. So this prior week, we closed the body we closed the candle at 42.47.44. We opened this week at 42.48.31. Perfect. So we opened just above where we needed for it to be a proper engulfing pattern. So yes, we legitimately have a weekly bearish engulfing candlestick on SPX. So let me just check the open on this one. 41.70.16, and we closed at 41.66.45. Oh yeah, so yes, confirmed we've engulfed 3 prior weeks real bodies. So that's quite a powerful candlestick sell signal, especially on the weekly time frame. So I just wanted to point that out. And that obviously suggests we have an important top here and potentially some significant downside to come. Certainly on the weekly time frame, that is a powerful signal. Okay, we'll get off the SPX chart. We'll go to the Dow. Now the Dow's been weaker. It's been the leader to the downside, and that still appears to be the case here. And the Dow, we're well below the 50-day simple moving average on the Dow. The next major moving average of consideration would be the 200-day, and that's way down here at 31,082. Currently, we're at 33,000 and change. So plenty of downside here on the Dow. As far as the wave count on the Dow, I'm less clear about it. I would have actually preferred to see the Dow make a new high before it tanked like this, but can't ignore that obviously we've broken trend and we're going down aggressively here. So I think we got something more substantial starting here to the downside. But of course, short term, we must allow for some corrective bounces. We are starting to get pretty oversold here, at least on a shorter term time frame on the Dow. Let's look at weekly candlesticks. What do we got here on the weekly candlestick for the Dow? Anything of significance? Well, just a very large red weekly candle that closed near the lows. Wouldn't say it's technically a candlestick signal other than that, but certainly a powerful red weekly candle, and currently just kind of sitting right around that 20-week simple moving average. You can see we have plenty of room on this weekly oscillator before we'd even be close to oversold on that time frame. Daily, yeah, we are oversold with the oscillator here on the daily time frame. So again, allow for some shorter term upward bounce to play out here. I think that's kind of my game plan early next week, what I'll be looking for. Just overall in the markets, not just the Dow. Nasdaq Composite. So the Nasdaq's interesting because it depends if we're looking at the Nasdaq Composite or the Nasdaq 100. Okay, and let me just, I'll go the daily candle. Okay, so nothing substantial here as far as daily candlesticks go. So let me just head over the weekly here on the Nasdaq Composite. So on the Nasdaq Composite, this could be, just going back to some pattern stuff again, this could still be a contracting triangle, A, B, or a running triangle, I should say, and that's where the B wave makes a new high above the origin of A. But again, A, B, C. So far, this could still be considered a D because we didn't get above this level at 14,211.57. And then if that's the case, we'd be looking for a partial retracement of this move off the let's see here, off the May lows there, for an E wave, and then we'd be looking for a fairly substantial move up to new all-time highs. But that only remains intact here on the composite if we don't make new highs, which we could very well. And if I look at like a 10-minute chart on the Nasdaq Composite, I have difficulty working this as a 5-wave decline, at least with what I can currently see. It's not nearly as convincing as as SPX, which I can clearly get 5 non-overlapping waves to the downside even on the shorter term time frame. So Nasdaq, I'm a little less certain of what's going on, but I find it hard to believe that the Dow and the S&P can have much of a decline without the Nasdaq at least suffering quite a bit from that. Maybe not as much if it's relatively stronger, but should still be some downside as well. Okay, so that's the Nasdaq Composite. Now what I want to get to is, okay, possible contracting triangle or a running triangle still in play on the Nasdaq Composite, not invalidated yet, but we cannot say the same for the NDX, the Nasdaq 100, even though it's a very, very similar index. I mean, it's almost the same index, it's just less broad. I believe it's just the 100, largest ones that you'd basically find within the composite. So lots of small stuff missing. But directionally, they're very similar. Let me just clean this up a bit. Bunch of junk here. Okay, so on the Nasdaq 100, this is clearly not the same pattern because we've already made a new all-time high just there on Thursday, actually. So if I just go to the not much here to speak of as for daily signals on the candlesticks. On the weekly, I mean, I don't know. I mean, this is like a mega bullish count, but you'd be like 1, 2, 1, 2. Like we had our pullback into our March low, like everything else, right, on the Nasdaq 100. But then maybe 1, 2, 1, 2, and then up again. So even under that situation, we'd still need some sort of shorter term pullback to set up for a decent long there on the Nasdaq 100. But again, I'm not going to enthusiastically embrace that because, looking at the Dow and the S&P, it really looks like there could be some big downside here. So I'm not going to jump on the Nasdaq bull train here just so easily. But just pointing out what I see, just viewing the Nasdaq alone, it certainly looks quite a bit different than the other indices. But we'll just have to see how that plays out. Okay, VIX. Let's have a look at VIX. VIX has certainly started making some moves. Now, nothing substantial yet, at least relatively. So obviously we're nowhere near even recent VIX peaks that we've made. But we are certainly starting to get some upside traction here on VIX. And I would suspect that if we do have something larger degree to the downside unfolding, we should be going a lot higher eventually on VIX, but one step at a time. Not much else to say there. I mean, I'm not a big believer of VIX candlestick signals, but technically a bullish engulfing candlestick today on the VIX daily chart. So take that for what you will. Now, one thing I do want to bring up is the VIX VVIX tool. And I believe I discussed this. Hang on there. I believe I discussed this before in prior videos when it was just setting up. But okay, so we had this divergence forming for a while where we were making new lows in VIX, but we were not making new lows in VVIX, and in fact making higher highs and higher lows. So we were already trending up in VVIX, even though we were still trending down in VIX. Now that's a divergence because normally those two move largely in tandem, as you can certainly see if you look back. Back in this area, they are almost moving in unison. But then they diverge, so something was changing. So that's step one of our signals using this tool. And what does it mean when they're diverging? Well, okay, even though the market was still going up and VIX was still going down, so the implied volatility of SPX index options was still going down. What wasn't going down was the implied volatility of VIX options. So if you kind of look under the hood on that, I would propose to you, and this is probably quite a reasonable assumption, that okay, institutions who like to hedge or get positioned for what they foresee as a coming decline, they have a couple they have many choices, but looking at these two things, so they could choose to be purchasing SPX puts, and if they did that in a large amount and frequency, that would drive up the implied volatility of those options, and we would see the VIX increasing, right? Or they can choose to put some hedges on or make some bearish bets by purchasing VIX calls. And by purchasing VIX options, in this case VIX calls, they would be driving up the implied volatility of those options, which is what we're measuring here with VIX. Because remember, VIX is basically a implied volatility measurement of VIX options. Like the volatility, right? So we saw VIX going up, so we knew that something was changing. They were putting on some bearish bets in the VIX options complex, even though they were not doing it at least yet in the SPX options complex. So just to give that a little bit of an explanation, what that divergence really means, what does it actually suggest? Well, I think that's what it suggests. Now, after we got the divergence, you look for VIX to kind of break out and get above its red moving average, which we did back here. And then to actually get the sell signal, in this case, we're looking for a sell signal, but it works largely just inverse when you're trying to do a buy signal setup. That final step was getting below that blue moving average on SPX, and you can see we did that over here. And all Elliott and everything else aside, candlesticks, everything, put that all aside. If you just use this as a mechanical trading system and ignored everything else, if you just simply went short, on the futures, once we got below this blue moving average on SPX, you could have had a pretty reasonable stop up to a prior swing high. And obviously, we went from basically 42.40 or so. So far, we've made a low of 41.60 and change. So almost a 100-point move from when that signal would have gotten you into that short position. Just giving you an example of the efficacy of this tool. Okay, nothing always works, but this is quite a complement to everything else that I look at for sure. I definitely always look at this tool, and it's always nice to see it be in line with the other things I'm looking at, which it certainly is here. Okay, now what else to remark on? Now we might be setting up a little bit of a short-term bottom, and I'll just point out what I mean by that just using this. So far we're making a little bit of a divergence. So VIX not making higher highs, even though VIX from the same reference point over here is making higher highs. So maybe we're getting close to a short-term bottom here in SPX, which I happen to think we are. And we're getting a little VIX divergence that'll help us kind of identify that as being likely. Anyway, that's certainly not the only thing I'm basing my decisions off of, but clearly this tool definitely has some merit. Okay, well, that's all I wanted to go through there. So just to, I guess, just summarize or put a bottom line on it, maybe I'll just switch back here to the switch back to the futures chart on ES here. So just put a bottom line on it. I think we're getting close to a short-term bottom, which I would view as either an A or one down from our peak. And I think the next kind of swing of significance will be some sort of corrective retracement of this initial decline. So some options of what to do with that. Well, we can try and play for some short-term upside, getting long, early next week, or we can just allow it to happen, let it bounce up, let the pattern develop, and if it's sets up a good-looking bearish entry, we can just wait for that and go bearish on that. So haven't quite decided what I'll do as far as whether I want to try and play the bounce or not. I probably will. I'll at least try. But that's what I'm looking at heading into next week. So yeah, it's nice to finally see some actual movement in the market. I mean, it felt for a while like oh, it's just going to keep crawling up forever and frustrating us. Well, of course, forever's a long time, and it never really happens, even though it feels like it for a while, right? So now we got some bearish action. I'm quite pleased to see it. I think it'll create some more opportunities here. Even if you're a bull, you should want a correction to actually reset things and create some new opportunities. So, all right, Serial Trader signing off.